Hi there folks, welcome to this week's weekly Forex Forecast. It's Monday the 7th of March. What a horrid week it has been in Eastern Europe. Those poor people in Ukraine displaced. It's been a tragic, horrid week, and there does seem to be no let up in sight at the moment. Now, of course, these events are having knock-on effects in all of the asset classes, stocks, commodities, and of course the currency markets as well. There's been big ramifications across the whole suite of asset classes. Now today we're going to look at the Forex market, how it's affecting the Forex market, and certainly how it affects our forecasts for the week ahead as well. So that's basically what we're going to be doing. Now, in order to access this weekly Forex forecast, head over to the forexsignals.com website, where you'll see us here now. Scroll right the way down to the bottom. You see all our bells and whistles in here as well, the pivot calculators, profit calculators and so forth. Hit the Forex Forecast, pulls up this landing page. Now, in order to access this directly to your inbox, so you don't actually have to wait and keep checking in, just pop your details in there and we'll send it to you the moment that it has been released. We won't be spamming you, just sending you the weekly Forex Forecast by dropping your details in there. Right, let's have a quick look then at what we are looking at this week. Now, as of last week, I was looking at the euro against the Swiss. Well, this has been a trend that has basically been unrelenting. It's basically been pushing lower, making new lows each and every day. It's been a playground really for trend followers. We've now broken through some key levels of support that I spoke about last week, which hasn't been seen since 2015 when the Swiss franc depegged from the euro. Basically back through there now and flirting with parity. That's basically 141. I'm looking at a continuation of this trend, but I'm also mindful that indeed there could be a reversal at some point, and the reversal could be quite brutal, which is why I'm always using stops in my intraday trades. We could see a bounce back up to 103.50 with very little or any news out of Eastern Europe. So mindful of that, but always playing with stops as well. Looking for trend continuation. In fact, any of the euro crosses this week could be worth looking at. Remember, always like to sell the weak currencies. The euro is weak, and buy the strong currencies. And you can look at that on the momentum meter, which we'll look at in a moment when we jump onto the screens. So I'm looking at a euro-Swiss short continuation. Max is looking at a bullish trade in UK oil, also known as Brent. He's looking at that up to 126. Upward pressure on commodity prices and so forth, and oil hasn't got away from that. And then you've got Shane. Now Shane basically goes through each and every day looking at what's in store on the fundamental side, looking at the news releases and so forth. He also throws in some technical analysis on his charts as well, certain currencies he's looking at. So well worth looking at that. It's a great way to plan for your week ahead by getting hold of this weekly Forex forecast so you can basically see what's in store. Okay, so let's now jump onto the screens and look in more detail at what we are looking at. Come on. Okay, so let's start off by looking at the faithful momentum meter. Now, this is the meter that I use that basically tells me which currencies are strong and which currencies are weak. Now, of course, it doesn't predict the future, but it does tell me where the money is flowing at the moment. And as a trend follower, I like to sell the weak currencies and buy the strong currencies. Trading is all about having an edge, and this just basically gives me a small edge. As I say, doesn't predict the future. Oh, I wish it did. And the big telling picture here you'll see on this week's momentum meter on the daily chart are these two currencies down here. Okay, so this blue line here, this is the euro. And the white line is the British pound. So these two currencies have been hit hard with all the problems and issues and the horrid events going on in Eastern Europe at the moment. So the euro is under big pressure. It is by far the biggest casualty of what we're seeing at the moment. And the main beneficiaries of what we're seeing at the moment are these two currencies. Now, this is the Australian dollar, the orange line, and the New Zealand dollar is the grey line here. What are these? Well, these are commodity currencies that are heavily dependent on commodity prices. And these are basically being bought at the moment. So there's strength going in the Australian dollar, there's strength going in the New Zealand dollar, and there's weakness flowing out of the British pound and, as I say, the euro as well. So if you're looking for an edge, maybe you should be looking at those particular currency pairs and maybe go with the trend, getting into the trend using your strategy. I like to use a pullback strategy on the lower time frame charts, but obviously always have your stops in place. Now, the other currencies that you need to also pay attention to here is this green line. This is the US dollar. Now, the US dollar is also seeing a flight to safety. So the US dollar is pushing high. Not only is it pushing high because the euro is weak, and of course that is the main currency pair that is traded out there. I think it counts for a third of all currency transactions is in the euro against the US dollar. So not only is the fact that it's driving high because of the euro weakness, but it's also driving higher in itself because it is a safe haven currency. Often when there's times of war and so forth, the money flows into the safety of the US dollar as other currencies come under pressure. So the US dollar is grinding high at the moment. For its own merits, and also you're seeing some strength coming into the Japanese yen and the Swiss currency. Now, the Japanese yen and the Swiss currencies, these are low interest rate currencies. They have pretty much close to 0% interest rate, so it's very cheap to borrow these currencies and invest in higher risk assets. So normally you'll see a flight to safety when markets become under pressure. So when the markets, like you're seeing at the moment, the stock markets are seeing some outflows, risk off, then you often see money inflows back into repatriation of those currencies that were previously borrowed. Now they have to be repaid, of course. So you're seeing some strength coming into the Japanese yen and the Swiss franc yen. Again, trading is all about having an edge and basically exploiting that edge over and over again. Right, now let's just have a look at a couple of the currency pairs. You know what I often say when you're trading trend, in order to get your win-loss ratio up, just pay attention to the daily levels of support and resistance. Think about this. If your profit target is through one of these key levels, maybe you should just leave the trade. Let the trade go, wait for the next one. This will really impact your win-loss ratio to the positive effect. So I think it's really important that when you're analysing the charts, maybe before the week's trading, that you have a look at the daily chart and just plot in some big levels of support and resistance. And I'll just scan a couple now so you can see how I do that. Okay, so let's start off by looking at the Euro Swiss. It's one of my trades that I'm looking at for this week. Go out to the daily chart and just plot the key levels. Now, I think the best way to do this is to be using the line chart. Now, the line chart removes all the noise, removes the highs and the lows. Now, we'll select the line chart just by going up to the top here. You'll see here you've got the patterns. Go for the line chart. And it's much easier to place support and resistance using this, and it just, as I say, completely takes out the noise. Basically, who wins the battle on the day? That's what we're looking for. And we're looking for those big V shapes or those A shapes or levels that have been respected more than once, and plot your levels in. I say do this on the week, before the week starts, maybe on a Sunday, and just basically don't trade through these levels. Just leave it for another day. Really impact your win-loss ratio to the positive effect. So we'll definitely have one there as well. We bounced off it there. Actually was the place where this went into descent. Of course, naturally you're going to have one there as well. You'll also have one up there. So just the key levels. The idea is not to place too many of these on the chart that you'll end up doing absolutely nothing. Just the key levels. And once you've done that, then you can go back to the candlestick chart and keep your lines on there as well. So, for example, if I'm looking for a buy trade, I'm not going to be buying right into the 103.35 zone. I'll leave that for another day because that is a level of resistance that may hold. So this is the euro against the Swiss. Let's try the euro against the US dollar. Okay, so this is the euro against the US dollar, the daily chart. Okay, so we're going to select our line chart. Okay, and we'll plot in the key levels on the daily. Now, you can do this, of course, on the 4-hour chart as well, depending on what time frame you're using. But there are more players that make up the daily chart. These generally are more significant than the lower time frame charts. It's definitely got a level in there, haven't we? We got a double bounce off that. That is definitely going to be a level that's going to be respected on the way up. Never really like using the word definitely when it comes to trading, but it's certainly a level that will be respected, I think, to the upside. Quite a bit of consolidation in here as well. for the euro dollar. I think that level there where we basically bounced off it would be something of significance there. And maybe that level down there as well, where you had that sort of big V shape as well. So once you've done this again on the daily, using the line chart, just going to plot one in there as well, which is basically the top of that. It bounced off it a number of times there. Once you've done that, you can go back to the candlestick chart. So the big level to the upside here will be around the 111.40 zone. That level I expect to be respected if indeed this does bounce at the moment. Now, because we are making a number of lower lows in here, and you can't really see it on the daily, not there with the setup I've got at the moment. I need to go out to the weekly chart actually, just to have a look to see where this may hold on this free fall that we seem to be having at the moment. So the weekly chart, again, back to the line chart here, will show that we may have some, well, in fact, we're at that level at the moment. Look at all these V shapes, bounced off a number of times here on the weekly. Now, you may want to make this a different color because it is a weekly, so you can determine quite quickly that it is a weekly level. And again, if the dailies are important, well, the weeklies are very, very important as well, because of course there's more players that make up those levels. So we'll definitely have a level of support coming in around there. So if this trend wants to continue, coming into the 107 level is the next key level of support where I would expect this currency pair to be respected. And I'm just dropping another one in there back at these lows, which is just behind my camera. And we've actually got one, where is it? There it is below me there. I'm going to pop one in there as well. You can see this big V shape there, just by my shoulder up there. There you go. Right, okay, so that is the weekly and the daily on the euro dollar. Let's go back now to the daily, and we'll go back to the candlestick chart as well for our trading. So big levels down there to the downside. Let's have a quick look now at the pound against the Japanese yen. Again, we're on the daily chart here. I'm just looking for those key levels. I'm going to head over to the line chart and just plot in those levels. You see how much clearer it is when you take away all the noise of those wicks. Well, we've definitely got a level in there on the daily, a level that's been respected with this big V shape. You've got a level down here. This is a double bottom. Often respected, okay, maybe even a triple bottom. Look, there's a number of times we bounced off this zone. I would expect that level 149 and a bit of change, 149 sort of 10 zone, to be a big level. I'm also going to plot one in here. Okay, so this level here, bit of a V, bit of a bounce there, bit of a bounce there. So definitely a couple of times it's been respected. It comes in around, as it would, as luck would have it, around the 150 level. So I expect that level to be another level. And I'm also going to plop one in about where we are at the moment in this currency pair. So you may see this currency pair at this level of support maybe being respected. Okay, and certainly if you do have a bounce, you'll be looking at that level up there as well. And as I say, doing this ahead of your trading week, do this maybe on a Sunday, just plopping in the key levels of support and resistance on the higher time frame charts will really help you improve your win-loss ratio. Popping the candlestick back on there as well. Now let's have a look at the economic calendar for the week ahead. Okay, so head over to the forexsignals.com website. You'll be landing on this page here, then scroll right down to the bottom. You'll see all our free bells and whistles, all our tools in here as well. Here you'll see the Forex Economic Calendar. Click on that and pull up your calendar. Now, anything that's marked as red in the impact column is deemed to be high impact news. It basically is likely to have a bigger impact on the markets. Anything that's yellow is going to have medium impact, and green, little impact. Now, last week we had non-farm payroll. Often you'll see the week after has little in terms of economic releases, just the way it is for some reason. I'm not quite sure why. So not a lot out this week at all. Some retail sales that came out earlier today, up 10.3. Now, if you're in doubt about what an economic release is, just click on it and it'll pull up a description. So this is basically, it says it's German retail sales, and it tells you what the different reads are likely to do to the market, if it's bullish or indeed bearish. So a bit of education in there as well. So a great way to learn what your economic indicators are all about. So let's just have a look at now to the next 7 days. Just scrolling on through, we've got some jolt numbers out midweek. Jolts, so US job numbers. I quite like a jolt number. It's basically first time jobs. A bit of an indication of where the economy is going. So I do like the job numbers. Although the indicator here puts it down at low impact news, just pay attention to that one, as it can sometimes move the markets. So the main event really we've got this week, as you can see it here with these 4 reds, is basically the ECB. It's the European Central Bank, is when they decide on interest rates. Now, it's unlikely that they'll be moving interest rates. You can see here they're currently at -0.5, and it's unlikely that they will change from last month. So this is the forecast. But what will be important will be the follow-on statement in terms of what they think about the asset purchase program that they're currently undergoing. Are they going to extend that? Are they going to keep that going? Asset purchasing basically means if you purchase assets, it's putting money into the system. It's more likely, I think, with the current situation in Eastern Europe, that is going to be maintained at best, maybe even extended to a certain extent. So we'll be paying attention to that. And later on in that day as well, we've got the all-important CPI in the US. CPI 7.9. That's inflation, 7.9. We may even see an 8 print. Remember, central bankers, they're mandated to keep inflation in and around the 2% level. This is huge, unprecedented levels that we haven't seen really in many years. And of course, high inflation basically means that has upward pressure on interest rates. And we know pretty much that the US are going to move their interest rates at the next time of meeting, which I think is on the 16th of March, if I'm not mistaken. Then we've got the RBA Governor Lowe speaking. Always interested to hear what the central bankers are saying. A bit of forward guidance. Harmonised consumer price index out of Germany as well. You can go through this in your own time. Trade balance numbers, that used to be really important back in the day when I was in the trading pits. And then we've got, of course, Canada, their job numbers as well. It's basically, the job numbers is like the early indication of the health of an economy. So that's why markets really do look at the job numbers in conjunction with the hourly wages, pushing up and so forth. Of course, that is inflationary as well. Then you've got the rig count in the US. So I say not a lot out this week. ECB and some job numbers out of Canada. But apart from that, not a lot. But it's always worth knowing what is out, what is on the horizon, even if you're not trading the news. You don't want to be caught out. You don't want to be taking a trade just ahead of Canadian unemployment numbers if you've got, say, a 10 pip stop, unless you're relying on lady luck. So there you go. That's the economic calendar. Okay, so I hope you found that useful. As I said, drop your details here and we'll send you this weekly Forex forecast the moment that it has been compiled and released, so you don't miss a trick. Now remember, we are streaming live around the clock, up to 7 times a day now. We've got 2 new mentors in from the US, so we really are truly 24/5 now. If you want to take part in those daily live streams, you can do so. Head over to forexsignals.com. You take out a 7-day free trial. If you don't want to stay, well, you don't have to pay, but I'm sure you will love it. But if that's not your thing, that is not a problem. We'll see you next week here for the weekly Forex Forecast. Don't forget, as always, follow us on the socials, and don't forget to subscribe to the channel here on YouTube if you don't already do so. I'll see you next week. Have a good, and most importantly, have a safe week.